معرفة.
Bismillah ar-Rahman ar-Rahim. Now let us discuss about vehicle finance. Again, purchasing your own car is an important decision each one of us makes. And in fact, many a times, car becomes like a moving house because you go with your family, you discuss in your car, you have enjoyment with your children, you have fun, you go to new places, you discover new places. So it's an enjoyment for the whole family to travel together in their family car. Or the same matter for a youth also. Driving his first car is a big moment in his life. So purchasing a car is an important decision, and Islamic finance also provides facilities to provide financing for vehicle finance. This is a very common structure in the market, wherein, for example, this is the customer who has approached the Islamic bank, and the customer wants to buy a specific car from the Islamic bank. So the customer provides a unilateral promise in favor of the bank that if the bank purchases certain identified car, then the customer will in turn purchase that car from the bank. So the Islamic bank makes the payment to the car dealer. The Islamic bank gets the ownership transferred from the car dealer to itself. The Islamic bank adds a profit portion into the car, adds its own profit into the cost price of the car. So for example, if the car was $100, the Islamic bank will add $5 as its profit. Then the Islamic bank will sell the car to the customer through a murabaha contract. Meaning to say that the murabaha contract will explicitly mention what was the cost and what is the profit, and then the number of installments in which the customer has to make the payment to the Islamic bank. The same rule applies that in case if the customer wants to prepay, there is no legal obligation on the bank to provide a discount or a rebate, but the Islamic bank may provide a rebate or a discount in the sale price of the car. So other important points are that the ownership needs to be properly transferred from the car dealer to the bank, and only then the bank has to sell it to the customer, not before that. The idea is that the bank has to take the ownership risk before the bank enters into a murabaha contract with the customer and transfers the ownership of the car to the customer. So this is in a way how a murabaha transaction is done for vehicle finance. This is basically how an ijara structure is there, a lease structure is there, wherein again a customer has approached the Islamic bank. The customer provides a unilateral promise. If the Islamic bank purchases the asset, then the customer will lease the vehicle from the Islamic bank. So the Islamic bank makes the payment to the seller, the Islamic bank purchases the car, the ownership is transferred to the Islamic bank, and after the ownership is transferred to the Islamic bank enters into a lease contract. When I say lease, what I mean is that the ownership of the car is with the Islamic bank. In the murabaha, of course, the ownership would transfer to the customer, but here the ownership is with the bank, and the bank leases the vehicle to the customer, and the customer makes rental payments, periodic rental payments to the bank. Now the rental payments will have both the principal portion and the profit portion. So the principal being, of course, the financing amount, and the profit is, of course, the profit which the bank would charge in this transaction. And once the term of the lease is finished, then in the end, as we have discussed earlier, there would be a set of undertakings initially provided, one by the lessor in the form of purchase undertaking to be exercised on maturity or default. So after the maturity of the lease term, the undertaking is exercised and the customer purchases the asset from the Islamic bank. In case of default as well, the undertaking is exercised and the customer is obligated to purchase the car from the Islamic bank. In case of early payment, again there is also a sale undertaking which is given by the lessor, which mentions that in case If the customer wants to prepay, then the lessor is in an obligation to sell the car to the customer. So this is basically how an ijara structure is used. Now this ijara structure is can be translated as lease to own, wherein the intention of the lessee is to own the vehicle after the period of the duration of the financing is finished, after the period of the lease is finished.